Hey, Steve Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you get sort of value and entertainment out of these videos, all I ask you hit thumbs up and subscribe. Questions, comments, put those below. This week's video, I wanted to touch on three things. First and foremost, where I got it wrong, where I think people are getting it wrong, and where I think CMHC is getting it wrong. So I think it's important to start off this conversation that it's important not to suffer from confirmation bias. I think that I look into all these comments and read what everyone's saying, and it's kind of the same, a lot of the same characters. I think that people get stuck in one view or one belief or one thesis, and as that data starts to change or as that view starts to go against them, that they dig in their heels and refuse to open up their minds. And so I think that's really truly important if you're just trying to I think be the best person that you can be, or investor, or vice versa, or whatever that may be for you. Because I think just opening up and being open to the fact that you might have been wrong. And so I think I'll start this off with humbly admitting that I was wrong in the fact that I did not believe that we would see multiple offers and people bidding up houses in the midst of the deepest recession in our lifetimes. I did not think that people would have the capacity, not only by banks lending money, but also have the confidence or lack of fear from engaging in a multiple offer situation, basically bidding up, for example, single family houses in the midst of the deepest recession that probably anyone here has ever seen. At least statistically speaking, it's the worst, deepest recession since the Great Depression. So I certainly was wrong in that aspect. I did not expect the market would be so resilient to date. Now, again, I think there's still a lot of things to play out. As I've said, I am certainly, putting my money where my mouth is. I'm making moves in this market. I still believe, as I've said in all these videos, I think I'm fairly consistent in my analysis and in my thoughts. Is not necessarily about making predictions, but in watching the market. And what I can say is from watching the market is that, again, people seems to me, I think is somewhat irrational to be engaging in this kind of behavior given the economic outlook. Which brings me to my next point is I think people are getting the economic outlook wrong. The biggest thing I'm seeing is that, and I've said this from the get-go, is that the reopening, the economic reopening is not bullish, it's bearish. The reopening is going to show everybody that it's not going back to normal, that a lot of these businesses that are going to come out the other end are not going to be there. So you might, as a restaurant, for example, this is a very easy case study. As a restaurant that's going through COVID, so they had to shut down, they temporarily lost a lot of revenues, everyone's fearing for the worst. Now they're getting a little bit of government help, they're kind of clinging on. Now the reopening comes, okay, great. But the problem is now you're reopening again at 50% capacity. These businesses survive, they hang on for 3, 4, maybe 5 months, and then it's a slow bleed out where, again, a lot of these businesses are not designed to remain solvent in a socially distant economy. Their business models are not designed to operate at 50% capacity or 70% of revenues or even 80% of revenues. It's just not designed that way. And so I think that basically now as the economy reopens, I think people are going to realize that the virus has not gone away, as clearly evident. I don't think I need to be an epidemiologist here to tell everybody that what is in plain sight is that clearly cases are accelerating right now at a rapid pace. That obviously, you can see it in the US, in Mexico. I mean, even in Beijing, they had a huge resurgence where they had to do put the part of that city back on lockdown. So this virus is not going to go away. It's going to be here for the foreseeable future. There is no vaccine on the near-term horizon. These things could take a year, 2 years. They may never come to fruition, as many vaccines don't. So that's number one. And then number two is that now, again, you have to see how are all these businesses going to survive with depressed revenues for the most part. And as we can clearly see in the U.S., the solvency crisis is just beginning. So here we can see the number of weekly filings for insolvency in the United States, in the corporate business market. So the solvency crisis is going to play itself out, and it's going to play itself out over the next 12 to 18 months as you're going to see more and more of these businesses start to lay people off. So people that may have survived, the first round of job layoffs immediately following the shutdowns, they're going to maybe not survive the second round of job layoffs. And this is where businesses start to realize that revenues are down and they have to cut somewhere in order to basically weather the storm, so to speak. And so I think that's where we're starting, and we're already starting to see these second layoffs. I'm sure if anyone here that's watching this video has any examples of that, maybe in their own business or from friends and family, I certainly would be interested in hearing your thoughts in the comments below. But this is should be no surprise. Just go, pull up the Bloomberg website and just look at where the job layoffs are happening. This is happening, and so I think that the white collar job layoffs are now coming. So the first wave was kind of the blue collar, the dispensable people, people that have less seniority in a company, and now as you get further out the chain, I think it's some of the better paying jobs now that are going to be cutting some of their workforce. And so I think that's where people got it wrong. People are getting it wrong, that thinking that the reopening was going to, it was just a temporary shutdown. We're going to reopen. You're going to have this V-shaped recovery. The virus is slowly going to dissipate, or we're going to get this vaccine, in the very, very near future. And I think that as we're starting to see, at least the stock market's reacting to the recent news of not only case counts rising, but overall, we're starting to figure out that the reopening is just not going to be a simple reopening. Take Apple, for example. I believe Apple just shut down 13 stores in the U.S. After just reopening them, they just shut them down. A whole bunch in Florida, I believe, some in Houston, where the virus outbreak has been a little bit more rampant. So again, that's, I think, important to contextualize. Now, I think the last but not least is CMHC. Now, I kind of gave these guys I guess a little bit of credit for having the audacity to come out publicly and give such a dire prediction, at least for a mortgage agency to come out and say that. But I think it was a reasonable expectation to say 9 to 18%, given the outlook for the economics of it. Now, where I think CMHC is getting it wrong is that this has kind of been my view from the get-go. As I said, what I like about this channel and a lot of the work that I put out is it's all documented there. You can go back and read the monthly reports that I put out, the Saretsky report. It's all there. So if you want to read my thoughts of what I was saying in March or April, you can certainly go back and read them. I leave them all up on my website, so you can see where I got things right, you can see where I got things wrong. But what I certainly have been saying since the get-go is that real estate market is extremely slow moving. So people don't realize is that prices don't drop, say for example, 5 or 10% in a 2 or 3 month span. These things take long times to draw out, and I think that's where CMHC is getting it wrong in terms of CMHC seem to think that the correction is going to be like right now, it's going to be starting, and it's going to end sort of almost abruptly at the end of 2020/early 2021. Whereas I'm actually in the view camp, and again, I encourage you to go back and look at my work. I'm actually in the view camp that the correction is more likely to start, again, closer to those mortgage deferrals starting to happen into Q4. You'll probably have, Q4, in the wintertime, the virus will probably be more rampant. I mean, you can only imagine going out in November, December when people are normally sick anyways, coughing, runny nose. There's going to be so many people on edge. If you got the slightest cough, I mean, you're staying home. So I think those are going to be challenging months. But people don't understand, and I don't think CMHC is maybe they're just playing dumb, but they talk a lot about this mortgage deferral cliff, and so a lot of these mortgages will be expiring in September, October, November. But just because the mortgage deferral cliff expires, your 6 months comes up, that doesn't mean like tomorrow you're now being foreclosed on and your house is on the market for sale. People don't understand is the foreclosure process in BC, for example, is about 12 to 15 months. So what that means is so let's run an example. Your mortgage deferral will expire, let's say October. Now October comes around, you still don't have a job, or you're still kind of trying to get back up on your feet. You're just behind. You can't pay your mortgage. So you miss the October payment. Then you miss the November payment. And then you miss, the December payment. Now the bank's going to say, okay, we deferred you. You missed 2 or 3 payments. We're going to go to the court. And we're going to start this foreclosure process. We need to get the ball rolling here. So now the judge is going to come back. It's going to take a little bit of time. The judge is going to come back. They give the homeowner usually 3 or 4 months to try to sell their place. They say, you got to put it up on the market and you got to try to sell it. So what we see now a lot of the times is 3-4 months go by. They owe so much in debt and they can't get their place sold. Now they go to the lender, the bank, and they say, okay, the bank now has the authority to now take over the listing. They're now in control of the property, and you're now basically it's a court-ordered sale officially. So and now now the bank puts it on the market. They don't just blow this thing out. They usually usually have to start high because they have to show the courts that they were able to obtain fair market value. So it's not like the U.S. where they just put it up and fire sale these properties. They usually start higher and they slowly, systematically reduce their price. So long story short is it takes 12 to 15 months. By the time that you miss, and I've talked about this many times, the time that you miss a mortgage payment to the time that your house sells is about a 12 to 15 month period. So you're talking about all these mortgage deferral cliffs. I mean, the deferral cliff is going to start. You're going to start in October, November, but the time you start to see these homes on the market in court-ordered sales is going to be more so in probably early to mid, more like mid. I would say more mid 2021 is more realistic. You're probably looking at mid 2021 in terms of some of these foreclosures coming to fruition. Now, just look at the foreclosure sales here. This is for Metro Vancouver, so Greater Vancouver, Fraser Valley. Here is the number of foreclosure sales in recent history. Now, as you'll be able to see in this chart, is even in, say, the Great Recession of 2008-2009, mortgage foreclosures only started to go up. More foreclosure sales only started to increase in January of 2009. They just started to go up, and they didn't peak until mid 2011. Okay, and that was obviously slightly different circumstances. I would argue the recession wasn't as deep, but so that's important to contextualize. Again, it's a long, drawn-out process. It's the same thing. Again, just go back to that time of period. So I think that's where people need to understand. Again, where I got it wrong is certainly in the short term. I didn't expect the market to be this strong in the short term. I've always said, again, in my messaging that if you do get a correction, if you do, it's going to take time. It's going to take time. You're probably looking again, starting because at the end of the day, it comes down to like supply and demand. Your inventory levels have to build. So if you started pre-COVID at 3 months of supply, well, you need to have months of supply go up to about 6 months before it starts putting downwards pressure on prices. But it has to stay at 6 months for like a sustained period of time. It's got to be at least 2 or 3 months before you start to see pressure on pricing. And so right now, we're in an environment where months of supply, for example, for a lot of the products, around 4 months. I mean, that's just, you need that supply to push higher in order to see prices decline. And so that's certainly not going to happen in the short term because the months of supply doesn't drastically increase in the matter of a month or two. So anyways, that's kind of my view. I'm open to certainly changing, interpreting the data as it comes through. Again, hey, maybe in October the market will still be ripping. Maybe it's going up in October, November, maybe. I'm not putting a high probability on that, but certainly what we've seen today has, I think, shocked a lot of people. So I'll leave it there for this week. Put in the comments where you think you may or may not have got it right, got it wrong, and see you next week.